Let's touch base now with the top management of NCC. Vijay Kumar, the Vice President of Finance, here with us. Now, if you look at the NCC share price also year to date, it's higher by nearly 16%. And companies like NCC, in the run-up to a union budget, are always in focus. But at a time like this, when the expectation is the Central Exchequer will be giving another kickstarter to infrastructure and, capex build-up, companies like NCC should be one of the beneficiaries. Can they be? All of that and more coming up for you in this interview. Mr. Kumar, good morning. Thanks for joining us here. 40,000 crore rupee order book. Such a strong number as well. Talk to us a little bit about what it's looking like. That's the last number that we have for your order book. Is it now more than that? What are your expectations from the new year and winning new orders as well?
Good morning to you. The order book position as on date when we speak, it is 40,000 crores. We have bagged something close to 7,200 crores in the first half of the year, which is 37% higher than what it was in the first half of the previous year. And some of the marquee orders, what we have got is from the Bombay Municipal Corporation sewage treatment plant. And we have AIMS BB Nagar 945 crores of worth of project, and we have certain water supply projects from Odisha and all that. I think going forward, the pace is expected to maintain by the company. Though the specific guidance is not given by the board, I think my personal guess is I think we should be able to pick up the pace in the same levels.
So that's the word that's coming in as far as the order book goes. But Mr. Kumar, you and I are talking at a time when we are seeing, going into the winter season, crude oil prices sell off. Commodities are coming down. Prices are coming down. This is very good news for companies like NCC. What can we expect on the margin front, which did fall to 10% in the last quarter?
Yeah, you're right. I think these are the things which is a spice to the now forecast. What I would say is we have slightly taken a hit in on the margins, EBITDA margins compared to previous year. Previous year it was 10.7%. Now we are in 9.6%. This was mainly because the prices were heating up that time. From first quarter onwards, if you see there is slight easing down of the commodity prices. Of course, I think as I said again, since the board has not given any specific guidance on margins, I personally, if you ask me, I think we should be able to maintain at the same levels a bit more as the prices are easing down.
Right. Vijay, what I also wanted to understand was the debt status on your books right now. And what is really the debt reduction plan? Given the rate up cycle, do you expect this to significantly then impact your cost of execution?
Exactly. We have a strong conviction on reducing our debt. There is no doubt about it. As such, we don't have much of long-term debt on our books. Compared to the end of H1 22, our debt has already been reduced by 220 crores. From 2,100, it has come down to 1985 crores. So this is something which we are very keen to reduce the debt. There is no doubt about it. And going forward, we do not see much of. We see even further reduction in the debt. What's your next question?
No, that's exactly what I wanted to figure out. Also, whether or not you're anticipating any slowdown of any sort when it comes to infrastructure spend, purely because cost of money is getting more expensive and owing to also some slowdown and recessionary concerns.
You see, India is growing strong when the entire globe is growing at 2%, 3% levels. We are still talking around in the vicinity of 6%, which is quite good. And if you see the central government expenditure also, capex expenditure, it has increased by more than 40% compared to the previous year. So I think looking to all this, we do not see much of a problem as far as the recessionary effects is concerned. Yes, the commodity prices is still a concern, raising interest rates are concern. But however, we have got adequate contractual structures in place which can take care of these shocks into uh, consideration. So we are positive about the outlook of the company.
Okay. I just wanted to understand from you as well, with the big news coming in for the Adanis taking over the Dharavi redevelopment. Is there any expectation of anything coming in for NCC, given that you're building over 60% of the book?
You see, right now I will not be able to comment upon that. It is at a very nascent stage. We will not be able to comment upon that on this particular thing.
Okay, but is there any talks of anything on that front currently emerging?
We'll surely share with you when the if at all there is something happens in that front.
I just wanted to understand in terms of what infrastructure activity you're seeing the maximum traction in. Is it waters, irrigation, railway? What is the sector?
See, largely, we are a well diversified EPC play company. But much of the orders come from buildings and water, especially. 63% of our revenue comes from building, and 17% of the revenue comes from water, and balance from mining, electrical, and other divisions. So these are the this is how the composition looks like.
Okay, we're going to leave it at that. That's NCC for you. Let's see how the 40,000 crore rupee order book improves, how the 10% margin last declared in the quarter gone by also improves when the input costs are all headed one way, which is down. NCC trading in the green, higher by about 3/4%.